Alright, yo, this how I made 0.826 0.83% on SPX. So this is actually a retake. My recording got fucked. So this is what I do. I actually did record it live. So let's see where it was. It's right here. This is the live recording trade. I only recorded this at like 1540. You can see here. So like 10 minutes after market open, and the trade I took was off of a fair value gap, another fair value gap, displacement, and yeah, I'll just show why. So on the daily we're actually bearish. Weekly we are still bullish, but daily we're bearish, and we're aiming for this liquidity right now. 4 hour we're actually bearish as well, and we had this 2 hour break of structure to the upside. So on the 2 hour we're actually bullish, but we take trades off the 4 hour and the daily, so that's what we're looking for. So we had this on the 1 hour actually still bearish as well, and on the 30 minute we were still bearish, 20 minute we're still bearish. So all that was bearish, but the 4 hour daily we're seeing I mean all those were bullish, and the 4 hour daily we're saying bearish. So we were taking trades off that. And what I had was this marked out where market reacted off here. So let's actually move for this because you don't need. And then we look at market open. So I look for a bigger time frame for value gap. So that's right here on the 50 minute, and you can actually see it in this recording as well, I think. So this is where market open, right there. Let's actually see if you see the 50 minute, yeah, here was forming. So right here, this is the 30 minute even. So let's actually see. Alright, so this on the 1 minute, that's actually the same as the 50 minute. I'm gonna show later. So this is the 50 minute, you could see it here. So this is the 50 minute right here. Leaving a fair value gap, this candle is going to close in 4 minutes, and it did close it right there. So leaving a big 50 minute fair value gap right there. So didn't mark out there yet. I first look, sorry, didn't show this. So let's actually move these. So I look at the daily 4 hour, and then I look for anything like order blocks and stuff. So didn't break structure here yet, but later on we did. So 1 hour's all the way right there. Actually, I see now we react off this 1 hour order block, but 30 minute order block right here. So right there, I could just leave it right there off the wicks. And then you saw on the 1 hour, I saw this as well, like this uptrend right here, and you can see this poking out or something like right here. So this actually looks like an order block as well if you zoom in. 20 minute, I want to see like a break of structure. So this is actually a pretty big order block right here. So I had this marked out as well right here. This comes in line with the 20 minutes as well, but I want to see like a smaller order block, and that's on the 7 minutes, and that's the same as the 5 minutes. So right here is actually order block as well. I later on removed this 20 minute order block, but let's go right here, and then the order box right here. So let's actually just put it like this. All right, so later on this fair value gap formed that came in line with like this order block. So we zoom in time frames, and we can actually see that we didn't mark it out. So here's the 50 minute right here, boom boom. So we had that marked out, and then we look at the 1 minute, and later we saw we drop right here, leaving a 1 minute fair value gap behind as well. So yeah, leaving this behind as well, and then we went down here. We reacted off this 20 minute order block. That's what all this was. So let's just move this. So we reacted all of this, and then you could see let's just remove. We know that this is an order block as well. Then we can see that we actually reacted off this 1 minute fair value gap, and that's actually the underline of the 50 minute fair value gap right there. but you can see we actually tapped it into the 1 minute here. It came in line with the 50 minute, but still I wanted to see like a fill of the 50 minute and not the 1 minute. So we already have this on the 1 minute that says bearish, and then we see a liquidity sweep off of the 1 minute tapping into this 50 minute. So we have a reaction of the 50 minute for value gap, a small liquidity sweep, and then after this candle, so right here, this candle right here, we want to see a break of structure to the downside after reacting off here. So not just a entry off of this for value gap. No, we want to see after this for value gap got hit, we want to see like another confirmation, like a break of structure to the downside, plus displacement to the downside, leaving a for value gap behind, and then entering right off the for value gap. So that means a market structure shift. I guess I don't really know market structure shift yet, but I know this, and I'm gonna trade like this probably in the future, because this is how I like to trade, and this gives like a lot of confidence, like the most confidence you can get. So liquidity sweep right here, then we wait for a bigger structure to the downside. So we actually get one right here, but as you can see, break of structure to the downside. As I learned from TGR, you enter off a break of structure then, but there are better options after this. So break of structure right here, and you can see market went right back to this. So this is a break of structure, but not a displacement break of structure. So what is a displacement break of structure? It is a break of structure just like this, but then I'll show it. I actually saved it on my desktop right here. Justin from Technical Traders, he actually explained it pretty good. So right here, alright, so I actually paused it right here. So this, oh oops, alright, this, what he marked out with this line, that's actually a break of structure, that's right, but we want to see a displacement. So I pause this. So after this break of structure, we want to see like another break of structure confirming this with displacement. So we want to see a pretty big candle, leaving a for value gap behind most of the time. So as you can see here, it didn't break bearish structure, that's fine. It did break bullish structure right here, but no displacement. So you wait, still wait. Right here, no displacement, no for value gap. Right here, this is the displacement for value gap, displacement candle, because there's a for value gap right here. So as soon as it fills this for value gap, so your entry is going to be right on this bottom of this bearish candle if you're bullish. That's where your entry is going to be, and your stop is going to be like right here, or I don't know. You could like figure out where your stop's going to be, but you enter right when it comes into here. And this actually gray box right here is another for value gap. So that's exactly what I trade. Exactly to trade is what I take. So for value gap reaction, then right here, break of structure but no displacement. With no displacement is a blue candle right after the break of structure, so no displacement there. We want to see after the break of structure, we want to see another bearish candle. So that's basically what it is. So displacement is a break of structure plus another same color candle after the break of structure. So right here you can see it's right away, it's blue. So we move this, later on break structure to the upside again, so we wait for another bearish break of structure. So what do we get here? Another bearish break of structure with displacement. You can see gap right here. So as soon as this gap get filled, and you can see this a displacement candle. Why is it? Because this is actually another same color candle as this one as well. So my entry is going to be right when we tap into here, because most of the time actually you're gonna tap into here like small wick and then goes down. But you can see here it disrespects this for value gap. Even though it disrespects this for value gap, doesn't matter. So your stop is going to be above the highest in the fair value gap right here. So that's what where mine is. And then my first TP wasn't actually this. You call this like low hanging fruit right here. But my first TP wasn't there. It was this low right here. So right there, that's my first TP. So it actually got hit. I'll show a MetaTrader screenshot like right now. All right. So second TP was all the way down here. This actually didn't got hit. Should have had it somewhere else, but still. This wasn't even my third TP. I thought this was like too high up, so I actually did it this low. Right there. Right there, that's the low. And then last TP was this low all the way right here. So at this, always set down right here. But only the first TP got hit. And how I could have done this better is, we marked this order block out. So 5-minute order block. That was a 20-minute order block as well. So right here, later on we moved this. But still, we saw this right here. We enter right when we tap in. Where is it? Oh yeah, right here. Why is it all the way right there? Alright, so we enter right off here. Almost gets stopped out, but on MetaTrader actually looks better. This looks closer than on MetaTrader, but on MetaTrader we had like more room. So right here, fell down right there. We're in a bit of drawdown right here. So drawdown right here. Then like profits right here, like small profits, drawdown, and then we actually were in profits right here. First TP hit, almost right away hitting second TP. But you can see why I removed this as well, because we were in this 20-minute, then we went down, and you can see like no really reaction here because it's pretty big order block. So that's actually 5-minute, and you can see this was my TP, but it actually should have been this top of this 5-minute right here. So this actually the beginning of the order block. So this will be a really safe TP as well, hitting the second TP as well. So you can see I didn't like this because this was pretty close. So what I actually could have done is, what I figured out is this the break of structure to the upside, and right here. And let's actually mark this like this. And then you can see when I put a line right here, this is actually 50% of this order block, and you can see the market perfectly filled this 50%, like small over this, but like pretty much filled this perfectly. So maybe in the future I'm that confident to like have my take profit right there, but still this should have been my second TP actually. So that's why this never got hit, because first TP got hit. Eventually it would have been hit, but as you can see right here, it would have been hit if I hadn't adjusted my my stop loss. But what I did was, of course, when it hit first TP, stops to break even, tap into the order block, stopping me out at break even, and then went all the way down, and it didn't even stop me out. Like right there, I would have gotten all these. Oh look, it even reached this last TP. So we swept the daily low now. So all my TPs would have been hit, but at my stop loss at break even. So maybe in the future I can have like, maybe I'm that confident, so leaving my stop loss like right there without even having a break even. But that's what I'm gonna learn still. But yeah, this trade that I had, I did put a screenshot up. So how could I even have done this trade better? I don't even know, because all of my boxes like checked out, like daily bearish, 4-hour bearish, all this was bearish, reaction of a order block, then a reaction of order block here, leaving a fair value gap behind, filling the fair value gap on the 1 minute. It comes in line with the 50-minute, internal liquidity sweep, and after this displacement with a fair value gap as well, enter off the fair value gap, stops above the high, and then yeah, I don't know what I could have even done better. Maybe yeah, it's hard. Yeah, I think all the boxes like checked. Maybe I should have had after this fair value gap right here. So my entry was right here. So maybe I should have waited for internal liquidity sweep again. So 1 minute slash 50-minute fair value gap got hit here. Internal liquidity sweep, fair value gap right here. So I could have repeated this. So I actually didn't enter right here. Wait for this low which I marked out as well. This low to get taken out, or this low to get taken out. So as you can see, this low actually got taken out. Did it tap into equilibrium here? No, so that would have been like, so maybe even wait for this internal liquidity get hit. So this one, but that would be like, you could repeat this like over and over again, so you never know when to stop. But so this actually where I entered, so maybe like right here, where I should have entered, and then maybe the closest, so this got filled right here, so maybe the latest for trade gap. So but that actually would have gotten me like a worse fill, so I don't know, maybe should have waited for this for trade gap to like get taken out, but it's still, I don't know how I should have waited for that. But I think this was a pretty good trade. It's unfortunate that I got stopped out of break even, eventually hitting all RTPs, because that would have been a let's see, that would have been a, yeah, by the way, I didn't even have my stops right here, so most of the time I should do this 47 and then 57, so like 10 above. But I watched like few hours of ICT and it said like it's fine if you have your stop above here. It still was pretty close, but it's fine if you have it right there, and it did. But this would have been a 1 to 6.7 risk reward, so that actually would have been like a top step funded in like one trade. I think if you risk 1%, yeah, no, not even, because you take partials, but pretty close actually. So yeah, actually this is what I learned from ICT, and it's actually pretty good, and from tactical traders as well. But yeah, it worked today. So first time I actually tried, no, yesterday I actually tried it as well. By the way, about yesterday I actually like kind of blew my funded account. Actually took like 4 trades, and that's like too much, and it wasn't there's no like consistency in it. So I put a screenshot up right now, so you can see actually lost this trade, and then I had a pretty good trade in my head, but still I got like nice profit off there, but it was like yeah, I would say revenge trading, but that's not what I wanted. So right when I did that, I just got rid of the account and started a new one. So this was actually on the new 50k account that I started, and I'm not gonna do like such stupid trades again. So so yeah, that's actually what happened yesterday. And so that was all in one video, but that video was like too chaotic, so there was a low stop, like a loss, a win, so many trades. So I just took one trade again from today, and that's what I'm gonna do in the future as well. Maybe later on when I'm actually profitable, but I'm not, so I actually should stick to one trade, and that's what I'm gonna do right now. So let's see if I can pass this 50k funded account. And yeah, so this was the trade today, and yeah, that's all. I will be trading. Oh, by the way, news. We did have news today. Unemployment claims 1 hour before market open, but I saw market just did fine, and it was like the same as forecast as well. 1k difference. Let's see what it did to the market. 1430. So that's. So this candle right here, so maybe it was bearish, maybe bullish, maybe it wasn't. Maybe news was bullish, maybe it wasn't. We can actually look. So this is, yeah, so it was bullish for the S&P, because this is less than forecast. That means like good for the S&P. So yeah, we did take advantage of that, but I think we already wanted to react of this for trade gap. So because on the daily and before I was actually bullish as well, bearish as well, so that's probably what market wanted to do anyways. Tomorrow we have no news, but I probably won't be trading tomorrow. I have tomorrow work, so I probably won't be able to take a trade or like look at the charts, because I'll be busy. So that's pretty sad, but yeah, it's fine. No news tomorrow, but I won't be able to take advantage of that. So yeah, maybe I'll do a trade recap. Maybe I did take a trade, or a chart recap. Maybe I did take a trade, or else I'll see you guys on Monday. Bye.